So welcome everyone to our webinar, Staying Ahead of CRS and FATCA Compliance Challenges. It's always good to stay ahead of the things that are coming at you down the pike. We have a great panel with us this morning, starting with Stanley Foodman, who's CEO of Foodman CPAs and Advisors. I'm also with Foodman CPAs and Advisors, Managing Director of Regulatory Compliance, and we have the great privilege today of joining us people from Transworld Compliance. A lot of you will know them already. We have David Olenzak, who is the President, and Eugenie Meidger, who's Director of Support and Training. So welcome, everyone. So before we get started, Stanley, why don't you, there are going to be people on this call who don't know us. A lot of the participants have been with us on other webinars, but give us just a brief summary of what we do at Foodman so that the people who are new to us will know what we do.
So we're a licensed regulated CPA firm located in Miami, Florida, with some back office support in Latin America. We specialize in basically three things. We specialize, but for this purpose, banking compliance, forensic accounting, and international tax compliance, and U.S. and as part of that, U.S. Complex tax compliance. And we've been around since about over 40 years. So that's what I have to say about this. And we currently represent in the banking side or the regulatory compliance side for financial institutions probably around 200 financial institutions around the world.
Super, thank you. And David and Eugenie, give us an idea of yourselves. What is tell us about what you do at Transworld Compliance.
Eugenie, you want to start?
My name is Eugenie. I'm the Director of Support and Training for Transworld Compliance since the beginning of 2016. I lead a team of 4 support professionals who give multilingual support, and we help financial institutions, multinational enterprises, and tax authorities worldwide to comply with FATCA, CRS, country by country, amongst other. And we also do a lot of research for latest changes and jurisdictions reporting requirements. Maybe you want to say what Trans Compliance does as being a president?
Sure. So I'm Dave Olenzak. I have 35 plus years of experience. My background is primarily IT. The last 20 has been compliance in IT. So I have about 10 years of experience doing AML IT systems, and then I switched over, started Transworld Compliance 11 years ago, I think it is now. And we build CRS and FATCA solutions for financial institutions. And then we've got a whole line of products primarily supporting the base erosion, profit shifting, OECD initiatives for tax authorities. We do have CRS and FATCA exchange systems for tax authorities. FATCA for the Model 1s, obviously, and all and CRS.
Well, that's wonderful. Thank you so much. So I want to jump into the topic that we have at hand today, which is what are some of the upcoming regulatory changes and how financial institutions should be preparing. So Stanley, tell us about some of the regulatory changes that we see coming in 2025 and what kind of impact that's going to have on the compliance process.
So let me start out by quickly saying, and that's great to have David and Eugenie with us because David has an AML background, and we've been saying for years that FATCA, in great measure, is an anti-money laundering. There's a tax statute, Chapter 4 of the Internal Revenue Code, which is also an anti-money laundering statute in disguise, and it fits in very well with the CRS structure and the Financial Action Task Force structure, which basically says that tax evasion is a predicate offense for money laundering. So coming up for this year, we're not looking at a lot of changes in the regulations, but what we do expect is an enhanced continuation of what we've been seeing for the past several years. And this has been driven in part by the staffing issues at the Internal Revenue Service of the United States. As most of you know, the FATCA is U.S.-centric, and U.S. taxpayers, both citizens, residents, and people who trigger the substantial presence test for the United States are required to report their worldwide income and their worldwide financial assets outside of the U.S. So because of their staffing problems, it has become more of a of an IT response from the FATCA department, and it's been spotty at best. And that's because they have a lot of staffing issues that have not resolved, and they're trying to fill in the gaps with IT support. And the other thing I'm seeing is, which we've talked about before to our audiences, is a convergence of regulatory and law enforcement authorities worldwide, and the IRS has become more and more important in that zone. And so we're seeing more and more regulators working together, both in the U.S. and with their partners outside of the U.S., in what we like to call a convergence into a sort of a supranational reporting system. So that's what I see becoming more and more present in this past year, and the year in which we're working. There's been a change in the login procedures for the FATCA portal. IRS started off with something called IDMe, which was a portal for individual taxpayers and corporate taxpayers, and they've now extended it to FATCA and foreign financial and U.S. institutions. And that's in part because, or in great measure because, I should say, the IRS is one of their prime functions is the protection of sensitive data and the protection from the misuse of identification numbers by criminals. So it is now increasing its technical innovation. It's making it more bureaucratic. It's increasing the skill level at IRS. And IRS is among the principal financial crimes investigators in the U.S. And I will say to you that we've been informed at an anti-corruption conference last year in Mexico City that the IRS can now trace crypto transactions. They've cracked the code, so to speak, on algorithm work, and they told me they love to investigate crypto crimes because they can trace them right back to wherever they started and look at all of the effects. So it's not only for tax collection, but it's also to assist the FBI and other governmental agencies with their cases. So, and the last thing is IRS is looking very strongly at crypto. As usual, it started in 2014 with soft notices to taxpayers. Soft notices are letters and or notices on the IRS website which said, hey, we've decided that crypto or financial asset transactions, digital asset transactions are actually transactions similar to other asset transactions, which can lead to ordinary income or capital gains treatment. And so you need to be reporting them. And over time, they've issued John Doe summonses to major crypto exchanges. And they have developed a large database of what to look for, and they're looking. And in the last 2 years, they've put a question on U.S. taxpayers' tax returns asking if they've traded in crypto. Truthfully, I haven't seen it on the corporate ones, but I think they'll show up on the corporate ones also at some point. But for individual tax returns, and they have to be answered in order to electronically file, and the failure to answer on paper filing is the same as making a false statement on a tax return, which is a violation of the Internal Revenue Code that can be treated as either a misdemeanor or a felony in the United States. And the last thing is the Corporate Transparency Act, which is also part of this convergence process. It affects the tax world, and it's having an impact on tax compliance because of the ability of the IRS to reach out to taxing authorities all over the world now for law enforcement purposes and to ask for information that they previously could not obtain. And they are ignoring local laws in other jurisdictions. Their position of the government is now that they want their information, and foreign players, foreign entities cannot, and their attorneys cannot rely on local laws in other countries to protect them from having to transfer the information back to the IRS. This is done through the compliance section of the banks and through the accounts that they have with other banks in other countries, and it goes beyond just what's running through that account. It can go to any account in a foreign bank or foreign institution.
Sounds like kind of more of the same, but just a lot more focused by the regulators. David and Eugenie, give us my view of what you're seeing from your side. What is on the horizon on the aspects that you guys look at?
What we see, talking about regulators, is that they're increasingly looking at data quality. Before it's 2017-18, it was okay. We have reported check. Now it's only we have reported check. It's also like, what did you report? The data quality, and as well, especially the TIN. So we are seeing an increase on the TIN validation, and as well, what we see is the within peer reviews for tax authorities. So when one jurisdiction requests a correction from another jurisdiction on, for example, the TINs, and they want to know, like, hey, I sent you a correction request, when can I get it? So there's more follow-up, there's more communication within tax authorities between each other, and so they're checking, and so now tax authorities have to be on top of their corrections, and especially what we see a lot is on the TIN, the tax identification numbers. And also
what would you say to financial institutions who are having difficulty getting correct TINs from their clients?
It starts basically, I mean, you are the ones that give the guidance and the training on what to do exactly, but it starts with the onboarding. It starts, a good onboarding with good quality of data will help with the reporting in general, and not only your KYC and AML, but also the reporting, the quality of FATCA and CRS.
Go ahead, David.
I was just going to add on to that. So for the IRS, TINs have been a real problem, right? And there have been a series of extensions where they've been, saying you have to have all your TINs corrected by a certain date, and then they extend it and extend it and extend it. And I think it really kind of stems from historical. If you opened up an account in the Cayman Islands, they didn't need to collect a TIN. So why would they? So there's a lot of data out there that doesn't have TINs. The Inspector General for Treasury has audited the FATCA program a number of times. I believe in their last audit, they were still at something like a 50% of the data either had incorrect TINs or no TINs match. So it's a problem and we could probably assume the same is true for CRS, right? We don't have the numbers, we don't have the data for that, but we can assume that it's probably relatively true for that as well. So we are seeing during the peer review process, the peer review process, as you probably know, they do it for AML as well. They do it for CRS. A tax authority's colleagues or peers will come in from they'll put a team together from different jurisdictions, come in and kind of grade you on how good a job you're doing. They usually have points of emphasis. And the 2 points of emphasis that we're starting to see is one, that the quality of the TINs. It's the same problem the IRS has, same problem they have with FATCA. And then the second one is those corrections, right? So Tax Authority A sends data to Tax Authority B. B says, I'm accepting the data, but you need to check these particular records. They're now asking Tax Authority A, did you send corrections, right? And anytime they ask the regulators, the tax authorities, it always flows down to you, right? So you're going to start to see pressure, financial institutions see pressure for that. And we're starting to see that already. One other point of note, I'll just throw out there real quickly. One of the things that we're seeing is there is going to be a new version of CRS 3.0, right? It's coming out. You got a couple of years. How does it affect you? When we do seminars, we take a poll, and well over 50% of the people do manual process for CRS and FATCA or some sort of homegrown in-house type systems. So you got to start thinking about that kind of stuff now, right? And it's always more, right? So they need more data points. It's not major. It's things like, is it a pre-existing account? Do you have self-certifications on file? What type of account is it? Depository, custodial, cash value, so on and so forth. So there's just there's more data points that they're starting to collect for CRS 3.0. If you're using a provider, you got to make sure your provider's on top of this and able to make the modifications. So, Stanley, I'm sorry. Go ahead. You want to elaborate on some of the TINs?
I was having a good time listening. So there's one thing that we have run into, which hasn't yet been mentioned, and that is there are holes in the reporting system that relate to countries that do not have that do not nationally have any agreements with any other governments with respect to tax reporting. We have a client. We represent most of the banks and financial institutions in a particular country as we sit here. And we were approached with a question, which was an AML question, but it went down to this. There was an apparent attempt by a large customer in one of these banks to create a trust that would then acquire national debt from that country. It would custody the national, it would accept and it would pay interest on that national debt to people from CRS countries. But because the country that was being requested to open the trust has no agreements with anything, there would be no reporting of the income earned on those assets to any country. And it would be deposited in US dollar accounts in that country or some other currency that the trust grantor or the trust manager would select for payment. So, and then of course it would be trading on the currencies and so on. And so the response that we provided was went back to the Fosac Fonseca. I don't remember the name.
Mossack Fonseca.
Mossack Fonseca problem
Yeah.
in Panama, which was that the answer was, do you want to be the next Mossack Fonseca? Because what's going on is there is multiple. These people are engaging in a quest to do multiple jurisdictional tax evasion and money laundering, because you don't know where the funds are coming from in order to acquire these particular government securities. So that's what we run, which is holes in the system, based upon the idea, based upon the historical fact that some jurisdictions have no agreements with any other jurisdiction in the world. Now that's being remedied slowly. We're seeing it in other jurisdictions now that had not had these agreements previously. And that is because they're having trouble getting correspondent accounts from other banks around the world. And so they're being forced into it and they're pressuring their government. So that's one of the other things, David, that creates problems with the quality of the data and the lack of TINs. Now, on the U.S. side, I'm going to go back to the issue of the lack of staffing. And so the IRS is going in a very, very slow fashion to implement all of its basic underlying requirements without consideration of any extensions. And that's going to take more time as they're staffing up. And that's assuming, from a perspective of politics, whether or not it continues on with a continuation of some kind of the current administration, or we have a future administration which has a different attitude about funding the IRS. So that's where we are on the U.S. side about all of this.
Thank you, Stanley. Before we move on, David, I wanted to follow up on the coming CRS 3.0. How is crypto is it going to be any changes in how crypto is treated in under the OECD regime? I know they're further along than the US is in terms of the crypto asset reporting framework.
Yes, they just published, they had published the rules on what you have to report and who has to report. And they just issued the XML for that. So it's going to be an entirely different reporting regime. It's reportable crypto asset service providers are who has to report, what they have to report. And this is kind of interesting, at least from my perspective. It's just transactions, crypto in, crypto out, crypto to crypto. When you purchase something, retail transactions with crypto, it doesn't include account balances or anything else. Right. And so the best we can tell, and we had some internal discussions about this, is that most of these crypto asset service providers are also financial institutions and are already reporting the reporting balances, account balances and other things. But it does bring up the question as to why traditional banks don't have to report fiat currency transactions, but crypto service providers do, right? And the best I can tell is may just come down to the fact that they believe that, or they know that more traditional fiat banks and financial institutions have a better AML regime than a lot of these crypto service providers, and so they kind of want to look over the shoulder of the crypto service providers. That it won't be coming for a couple more years, and most of the people on the call here probably are not currently dealing with crypto. But if you do start to deal with crypto, this is something that you will have to start tracking and reporting, and all the rest of it.
So that sort of challenge is controlled on our side by FinCEN, Financial Information Crimes Reporting Center, whatever we want to call it today. But they're in charge of the Bank Secrecy Act and the AML situation in the United States. It's like the umbrella organization just for AML. It has a strong relationship with OFAC, and OFAC and AML crimes can overlap at certain places, and one could create a crime from one could cause a crime in another. But what FinCEN has said more recently is they are implementing a situation, and they're in the process of it. They're going through their public remarks situation. They're asking for input. They have asked for input. They are intent on making crypto accounts in anything that they consider a financial institution to be reportable as to balances and transactions, depending on what they're reporting about. So under the FATCA regime, under the FATCA regime, transactions themselves are not necessarily reportable. We're talking about balances and we're talking about income streams. Whereas under the rest of the FinCEN regime, which is used to control brokerage houses and also which runs through the SEC, transactional reporting occurs. So I think that the crypto exchanges in this country are already in the midst of converting over technologically to doing full reporting, just like any other brokerage house would do with respect to crypto and digital assets. They're integrating with the IRS requirements for reporting. The IRS last question wasn't whether or not, was if you did anything with crypto, if you bought it, you sold it, you traded it, whatever you did with it, please answer this, please say, check the box, yes or no. And because the use of crypto to buy something could create a reportable transaction, the use of crypto to sell something could be a reportable transaction, depending on what it's used for. So, and the type of transaction it is. So we're already going down that road. We're not the CARF from Europe, which you're very well positioned to talk about today, David, is already being implemented through other paths in the United States. The IRS began that process. The commodities board in this country, what do they call it again, Isabel? The
CFPB, the Commodity Futures Trading Bureau.
They want a piece of it. The SEC wants a piece of it. But you're going to see probably that the IRS which has taken the lead, will continue to take the lead, and everybody will be depending on them to create the databases they need to do their own mission statements and to comply with them.
Yeah. Well, I think we could probably do a whole webinar just on crypto compliance. So let's move on with the topic here. And I think that we just got a question that I think could go right with the next segment. So I'm going to throw this out to David and Eugenie. The issue is, what are some of the challenges that FIs come when it comes to administrative aspects? And the question that we just got in was someone from a financial institution in South America, and they don't have an account on ID.me, and they're having trouble creating one. So obviously, these are some of the different challenges, technical challenges. So maybe you could answer that question while you address sort of the overall issue of administrative aspects of FATCA and CRS compliance.
Do you want to start, Eugenie, or do you want me to?
Yeah, you can start. You can do it. That's
okay. So the ID.me. Now I'm going to get up on a little bit of a soapbox here. I'm not a huge fan, to be honest. The venture capitalists and private equity firms and so on and so forth have put $250 million into this company. They know that the real value is not a little login thing. The value is in the data they're collecting. So to set up an account, and you're right, it is very onerous. You have to show your passport, your biometric features, your share your tax identification number, all this stuff that you have to give them, right? And that's where the real value in ID.me comes in. And so I don't think, have been able to convince commercial firms to do this, because nobody would go through that process unless they had to. But you have no other choice. When I trademarked our logo, I had to go through this process for that trademark process. It seems silly to me, because if I'd gone through a trademark lawyer, I wouldn't have had to do any of this. But because I did it on my own, I had to provide all that information. And my real concern, of course, is that they have everything that somebody would need to steal my identity, right? They could take out a mortgage, they could open up a bank account, they could take out a home equity loan against my house. They could convert all that to crypto and have it off in the distance. And months or years from now, somebody comes and says, well, your house was used as collateral. We're taking your house. And I would say, well, it wasn't me. And they say, is this your picture? And I'd say, yes. And is this your passport? Yes, that's my passport. Is that your tax ID number? Yes, that's my tax ID number. Is that your signature? Yes, that's my signature. So it's you, right? They have everything that they would need to steal your identity. And so, I have an issue with ID.me. I think it's intrusive. Once you get past that ID.me login, you can log in as anybody, ironically enough, right? Then you just get the regular login page and you put in your FATCA number, the first 6 digits of your FATCA number and your password, and you can go ahead and log in and you can get into anybody's account from there. So I don't think it really actually provides any additional security. But it is a problem. It is an issue, especially when you're overseas and you're trying to set one of these accounts up. I don't disagree at all with that process.
Could I just take a quick pause here and mention that I've worked with a couple of people using login.gov instead of ID.me, and it is much easier. It's much less intrusive. So maybe try the login.gov option rather than the ID.me option. So sorry, go back, David, and
so they're attached, just so you know. Once you use login.gov, you're effectively have created your ID.me account.
But you don't have to provide all that information.
Well, that's because I'll explain why later, because I think we're getting into the weeds.
Okay, yeah. But go ahead, David.
I happen to agree that ID.me is intrusive. I don't know how good or how robust their anti-hacking software is. Ostensibly as an excuse or as a reason provided to the public for doing this, they're saying, well, we're going to protect your identity because every year we're going to issue a PIN number. The same thing will apply, by the way, to the banks at some point. They're having a PIN number and so on. And we're going to do all of these things, and that's going to protect you, except that we're already seeing the misuse of PINs. So because they're out there and because people have keystroke espionage software that they load into other people's computers, and it's done widespread through very large, powerful computer systems. And I think we're just in the age of lack of privacy that's not going to go away. And governments are using government is using the reasoning, which is we're here to protect you, and this is how we're going to protect you to do it. But and some of the people that I work with on the tax side, they do like ID.me because you get instant information on their own clients through the power of attorney system at the IRS. But it still suffers from the same negativities and negative characteristics that you were speaking about, David. It's problematic, and it's their latest attempt to try to protect ourselves from ourselves. And while they're gathering all of our data that I don't personally think they have the need for. But that's just my opinion. And who am I?
But some of the other challenges that we see, Eugenie, what are some of the other challenges that the institutions might be facing?
Well, the ID.me is another administrative burden for financial institution. What we see is a change of staff. So if I'm the compliance officer now and I register myself, as a small financial institution, ID.me, and I'm fired to say something, or I find a new position, for a new job. I leave, and if I do not communicate it well with another, and then another one has to do it, and those changes are hard. I mean, there's a question on someone like it's difficult to create an account. So it's another administrative burden of compliance, and people move. So we see that's not only with the ID.me, it's in general the institutional knowledge that's not being passed on. I speak of experience more than, yeah. We'll see there's a lack of training because we provide a tool, but I cannot tell them 100% what is CRS, what is FATCA. That's what you guys come in to give them the CRS and FATCA certifications on what it exactly is. So there is a lack of training there. Not all, but quite some. And also still there is a discussion going on within financial institution, like who is in charge of the reporting, especially large financial institution, and each department has its own role. So, okay, I have to collect all this information, that's IT. And if IT doesn't communicate with compliance, then okay, IT, here's the information. Okay, you have to upload it in a tool, or you have to go through that information. Oh, but there are a lot of flags. Who's in charge of all those flags? We have to remediate it. There's indicia, there's the compliance one. And then who has to be the final reporting? Is it the tax one? Is it the compliance? Is it an external party? So we see that there's within very large financial institution, there is still kind of, it's not clear whose role is it in the reporting. And then what we see is in general, the compliance is not being given a lot of budget because the reporting for FATCA and CRS is only once a year. But they have to involve IT, and sometimes they involve maybe in other departments or back to the commercial to reach out to customers. So there is a lot of work behind that once a time reporting. So it's a lot of administrative burden that we see.
And I think one of the things I've noticed is a lot of siloing, so that sometimes if the responsibilities are divided among different departments, the departments aren't talking to each other. And so you're not getting, say, the full synergies that you could get out of the compliance process. Sorry, David, go ahead.
No, I was just going to follow up with what Eugenie was saying. And, Stanley brought up the crypto asset reporting framework. There was CRS 3.0. There's a new initiative the OECD is putting together to track gig economy, Uber and Airbnb over 2,000 euro, I think it is. That data will start getting exchanged. So what you see is more and more and more, right? It's more due diligence, more data points, more collection, more things you got to go through even just to access the portal. So unfortunately, and Eugenie kind of touched on this, is that most senior management looks at compliance as being a cost center, right? And it's very difficult to get the resources you need. So you need to do more with the same amount of resources that you currently have. And it's a very difficult position that compliance officers are in, right? And the most valuable thing compliance officer has is their time. So what compliance officers need to do is they need to figure out a way to be more efficient in executing their duties. And I would advocate that you need to use technology. You need to use technology to be able to make yourself more efficient, to be able to do everything that's now on your plate. I mean, you never heard about a compliance regulation that goes away, right? They never sunset this stuff. It just keeps piling up and piling up. So I'd recommend the use of technology.
Well, I would agree with that. I agree with the use of technology completely. This has become its own. It has taken on a life of its own. It's a large sector of employment worldwide now. So to reduce it would reduce employment. So there's a reluctance, I think, on the part of government. And one of the things, though, that the institutions want to do is always have the least amount of friction possible in moving through data and doing things, because they are also for-profit institutions. So, of course, if they hire more people, they have to pay out more money, and then they have to charge their customers more. And there's an old expression in Mexico, which is Jalisco nunca pierde, which means that Jalisco never loses. So the banks are going to pass on those costs to somebody. And the governments never provide any money to any of the institutions for implementing these things. They just don't. So it's a continual issue, and it is also a training issue, by the way. It's a human resources and human relations issue within the institutions. There's the question of the loss of institutional knowledge when somebody leaves a job and they're the FATCA responsible person in our case, and you assume that that somebody's going to be able to get into the EDIS site, but now they're going to have to go in through the ID.me. And so if that person leaves, they're locked out of their account. They can't get into anything. They can't make any changes. And if they call the FATCA department doesn't answer, or when they answer, they put them on hold, or it takes them forever to get back to them if you send them a fax or some other question, either by electronically. So it is a kind of what we used to call a catch-22, meaning there's no way out of it, and there's no way to make it better other than by technology. And then the technology has to continually be improved or modified to keep up with the changes. It's a constant race on a treadmill.
Following up on something that David was just talking about, the data points that you have to collect, we have a question here that asks how you can validate the self-certification in onboarding, both in person and digitally. And I just wanted to reiterate that both FATCA and CRS have the same standard of knowledge, which is that generally you are allowed to accept the self-certification as valid unless you know or have reason to know that the information is incorrect. And the problem with digital onboarding that we've seen is that how much information you collect or getting incorrect information depends on what questions you ask in the onboarding process. So I think it's important to make sure that you're getting full information on the clients that allows you to detect whether there's a reason to know that the information isn't correct. But I don't know if David or Eugenie have any more insight on how validating self-certifications, particularly in the digital platforms, can be achieved.
We do. So there are two sides to CRS and FATCA. One of them is you got to change your customer onboarding procedures to collect all the information up front, get all the self-certification, so on and so forth. And then there's the other side of it, which is the reporting piece of it. We concentrate on the reporting piece of it, identifying who needs to be reported, catching any change of indicia, dealing with a lot of the legacy data, that type of thing. And then actually, getting it all in the right format and getting it to the regulators. We do have a partner that does the onboarding piece of it. So there are some Tanya is the name of the company. There are some companies out there that do concentrate on the customer onboarding piece of it. When CRS and FATCA came out, it was relatively easy for them to change their account opening form to make sure, who are you a tax resident of? Are you a U.S. citizen? So on and so forth. There's the W-8, W-9s. There's a recommended form for CRS, but it's not, there's no official form per se for CRS, and most of that's been incorporated in the account opening process. I don't know if Stanley wants to elaborate on that, or.
Well, I have one practical piece of information that I think would be useful for our audience. There are a number of people who open accounts, and these are U.S. people, who at one time or another, before they became a reporting U.S. citizen or a permanent resident or subject to the DAYS test, a substantial presence test in particular, they had something called an ITIN. And an ITIN starts with the number 9. And so the ITIN was only allowed for certain types of transactions that occurred in the U.S. It was given to non-resident aliens who were engaging in certain real estate and other transactions. It has a limited use. It is not a social security number, but it has the same number of digits. And there have been a number of those, a large number, issued over the years. People fill out a Form W-7, provide a passport, blah, 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 and they get this number within, during COVID, it was within a year or two, but now it's within a matter of probably 6 to 10 weeks. But that number is not a qualifying number for a taxpayer identification number for purposes of FATCA reporting, and ought not to be accepted for CRS reporting either, because while CRS is not something the U.S. has signed on to, we have pre-existing FATCA agreements, Model 1 agreements, and Model 2 agreements with many of the same countries, which is why that loophole I spoke about earlier becomes important. So I would tell you to be careful of ITINs, which they call the individual tax identification number. But it's really only for specific circumstances and doesn't apply to a U.S. account holder in a foreign jurisdiction.
The W8, the W9 instructions do say that ITIN is acceptable, but I think what the point you're making is that if a person has an ITIN, they're not a U.S. resident. They may have U.S. tax obligations and they may have met the substantial presence test and may need to report something. So a person with an ITIN could sign a W9 or a W8, depending on their circumstances. But it would
They
certainly be
could,
something
and if
that needs
somebody
to be looked at.
accepted it, it could be a problem. Okay, especially overseas with respect to the reporting we're discussing. We had, this is a different situation, and it has to be what I'll call thin sliced to get to the right place. Okay, and so I would suggest that while it can be used in the United States for certain purposes, it's different when we're discussing Chapter 4 and even Chapter 3 of the Internal Revenue Code with respect to reporting. It's a different situation because that's U.S.-centric reporting.
So unless you guys have anything more to add on this subject, let's move on to the next subject we're talking about. And this, I think, is mostly for David and Eugenie, how to integrate automated solutions into the process. This may be something we've already been discussing all along, but I don't know if you have anything else you want to add on that particular subject.
Do you want to start, Eugenie? Or?
Yeah, I can start. Using APIs when you do have, let's say, a good reporting solution. We work with APIs where you can connect your core banking system, your onboarding system, and your onboarding system with an API. We have a standalone product as well for the TIN validations. So on the onboarding, we check the formatting of the TINs. And as well, the whole core system can be loaded into our system. So it's not only because they're a financial institution that report the ones that they think that they are reportable. They did their filtering process manually. So if you have an automated solution with an API and you filter your whole core system, and a good system will raise flags and give it back to the core system on there's indicia for a customer, the better and the more automated, it will streamline the reporting at the end as well. I don't know, Dave, if you have anything to add on that.
Yeah, when a financial institution of any size, now some of the smallest ones don't, necessarily have these issues, but of any size loads data into our system, there are a lot of flags. There's a lot of legacy data. There's a lot of dirty data. There's a lot of bad data. And it's, we tell them, don't worry, this happens all the time. It's going to take time. Cleaning this stuff up just takes time. You just got to be patient, but you have to get on top of it. You got to know how big the problem is. What are the issues? How do we go about doing it? We do have some large banks that will slice up their data and say these customers are out of this bank branch, and the customer service reps, when they've got downtime, try to research and fix a lot of that data. There have been free-form fields from some of the legacy IT systems that would allow you to put in any country code or any country name, and trying to get those cleaned up and matched. There was one bank in Jamaica. I think there were 12 different spellings of the word Jamaica, and and it's sort of like, well, you assume that their customer service reps opening it know how to spell Jamaica in Jamaica, but just fat finger mistakes, right? Just typing typos and that type of thing. So yeah, I would, it's a matter of, trying to get on top of the problem, trying to fix the problem, and don't worry, nobody's 100%. Nobody's got this down 100%. Nobody's data is 100% clean. It's going to take time. It's going to take time to reach out to customers. It's going to take time to clean up the data, but you want to get started. Right. You don't
here's a question along those lines. We have a question. What do you put for the NIF, which I guess they're meaning the TIN, for what they're calling migrantes irregulares, or irregular migrants? I guess people who don't have permanent residence anywhere. But how would you treat that?
Stanley, I think you might.
Well, if we're talking about FATCA, and we're talking about people that aren't U.S. citizens or U.S. Permanent residents, they don't fit the question. Okay. What Isabel was talking about was temporary people who are temporarily, quote unquote, in a country who are trying to open an account, and they're from another country, and they're there for a temporary amount of time to do a temporary job, but they have to open an account to do it. They could be agricultural workers, they could be professionals just passing through but want a place to deposit their funds while they're there. It could be any number of things. And with regard to the local requirements, I think we have to defer to local counsel and local tax counsel with respect to things like NITS and other numbers for local jurisdictions.
Yeah, I mean,
So
one of the things we tell our clients a lot when they talk about undocumented people in the US, how do you treat them? And unfortunately, if they meet the substantial presence test under FATCA, even if they're not documented in the US, they are going to get captured into that FATCA, and you really can't have them as they can't certify as being non-residents. And so therefore if you open accounts for them and they don't have a TIN, you're going to have a recalcitrant account. So I think that if you're talking about undocumented people, that's a challenge for financial institutions.
Yeah, and so we've had a situation in this country, David, in Eugenie, where people are interchanging or exchanging social security numbers in order to receive payroll and other things, and then they're opening accounts, or they're taking their checks to check cashing stores and using that same number to be able to cash a check, and just, it's been one of the issues, been one of the problems in this country that they have has not yet been overcome. But I will tell you that check cashing stores is always a target and is a continual annual target, multi-years for the IRS to audit, and they pick up on these things when they audit. But that's how people get driver's licenses that they're not supposed to have and other things. So it's not just banking; it's just a perennial problem that's affecting countries all over the world. That's why I say defer to your local authority.
On the CRS side, for sure, absolutely. So Stanley, let's move on to the final section of our presentation today, and that's talking about preparing, or what should compliance programs be doing to prepare for upcoming regulatory audits, how to ensure accuracy, how to minimize risks.
So from the U.S. perspective, I think, and even from the international perspective, I think there should be the risk assessments which will spill over into these tax compliance areas when they're implemented to cover those areas. They need to include information related to the bank's customers themselves, the products or services that are being offered to the customers, what jurisdiction they're in, and what delivery channels they have for delivering these particular products. So with respect to customers, we're back to KYC. Who's your customer? Do they appear on any lists where you have to be cautious about them? And what is your risk appetite? And risk appetite applies to all of this. Different jurisdictions. So there are jurisdictional risks or country risks. Some banks won't do certain services. For example, throughout Latin America and the Caribbean, money service providers, which are the people like, I don't know, who we use over the years for money services, transferring money, the cash transfer companies, they're not considered low risk customers. They're considered high risk customers. Casinos are high risk customers. So it's important to understand what type of customer you have, where they're located, what their services are, and then how are goods and services being delivered through what channels. It's, we always laugh about a particular thing with Isabel, where a bank, and let's say in the Caribbean or Latin America, is receiving or is being asked to pay for a delivery of petroleum to that country, right? Oil or petroleum products. And the bank on the other side is Cyprus, where they don't produce any petroleum. So then the question becomes, who is this, where is this coming from, this delivery channel for these goods and services for your customer within your country? So these are things that have to be looked at, I think, with great care. And there are ways that software can be used to make this easier. I'm sure that it's possible to integrate certain lists and other things into the software so that when transactions are monitored, certain information pops out that says, "Wait a minute, let's temporarily or permanently stop this transaction from occurring." And I think from David's perspective, that can be part of the IT solution that exists.
So before we finish this section and I take a couple more questions, I also just wanted to add, one of the things that we do at Foodman is to do reviews of your compliance programs. And I wanted to just touch on a couple of the things that we see as maybe structural weaknesses or areas that people could be a little bit focused on. And I think one of them, as I mentioned earlier, is disjointed control structures, where you've siloed information, where if there's no clear 3 lines of defense, meaning that you have the front line that owns the risks, the compliance, the second line, which is compliance, and third line, which is internal audit. If you haven't created a structure where all of the different entities involved in compliance and internal controls are talking to each other, you might not be doing everything you need to do. I've seen institutions where legal is the one responsible for FATCA compliance, and they're not, for example, validating GINs or periodically checking on whether GINs remain valid. And I think that lack of that particular control could create a problem for that institution. So if you have different entities involved or different areas of the bank, you need to make sure that you've looked at, as Stanley said, the risks, where your controls are, and make sure that they're being adequately addressed at the front and the second and third lines of defense. We also have seen a lack of validation of self-certifications, and this was a question that came up. How do you validate the self-certification? Well, again, if the information, the AML information is good, you should have a good ability to validate, but you can't just accept. I mean, I've seen cases where a customer initially wrote down, like in 2013, they opened the account and put their place of birth as New York. Then when they update the information in 2014, now their place of birth is, I don't know, Venezuela. Obviously, that is a conflict of information that you need to address. And you can't just say, oh, yes, the client signed a certification saying he was born in Venezuela. So those are things that I think, and the one final thing is making sure that you're getting self-certifications for all new accounts and ensuring that the certifications themselves, the wording is consistent with what's required by the IRS. You can't just say, are you impacted by FATCA, yes or no, and leave it at that in terms of a self-certification. There's things that have to be done. It has to be either under declaración jurada or penalty of perjury, and it has to include all of the disclaimers and disclosures that the IRS requires. So
What about self-audits, Isabel?
the internal audit aspect?
Yeah. What
Yeah,
about it? Go ahead.
That's another thing that we have seen. Good. Thank you for reminding me of that one. That internal audit is not conducting annual audits of FATCA. Sometimes they're doing it before the periodic certifications, but the lack of internal audit being involved in reviewing FATCA compliance is also a problem, because internal audit is going to find things that will trigger you before you get your regulatory audit, and certainly before you do the periodic certification. And I think, Stanley, you were going to mention the Foodman audit guide.
Yeah, we have an audit guide that's being updated. It should be done by the end of December. We're updating it, and it's one of the products that we have that we can provide to our clients at a price, and we're happy to discuss that with anybody. And as part of what we do, at least for the first one and forever, if they like, we assist their staff in implementing these internal audits for FATCA and CRS. And with respect to what you said about FATCA, it's true, but it also will apply to some degree at CRS, depending on how the local authority determines they want to have these certifications and how they want to monitor them. And if the local authority is not stepping up to the plate, as we like to say in the U.S., and hitting their home runs, and aren't even hitting singles, in baseball terminology, it's an issue for the institution, because it doesn't know and doesn't have actual guidance outside of the manual for what the local authority wants them to do. And then when the foreign governments get involved, or when the people from the OECD come in to look at it, they can get dinged, and it can affect the reputation. It has a significant chance for reputational risk, and you know, to be injured by not going through these things. So, and by not having the local authority doing its job, it can affect the reputation of the institution and of the entire country for that matter.
So we're getting close to the end, but I do want to throw the microphone back at David and Eugenie here. If you have anything to add on how to prepare on the technical side for a regulatory audit.
Just kind of real quickly, it's just document everything. I mean, not just the policies and procedures. Make sure you have all the information that you need. As an example, we do tax authority software. One of the reports they can run, they can determine deltas year over year. So if you did 5 reports last year and 50 reports this year, they're able to see that. And they may come knocking and say, you know, what's going on now? You might have divested some businesses, you might have acquired some businesses, but you may need to also explain why or why not you did or didn't report somebody. And it could be something simple like they were below $50,000 depository account. They exceeded the threshold and are now getting reported. But you need to have that documentation there. You need to have the data there. And certainly on the policies and procedure side, the same sort of thing. I mean, a real quick war story with Eugenie contacts every customer we have, and there was 100% turnover in the compliance department in one of our customers. And when she finally got through to the right person, they're like, didn't even know that we had a license to that software, you know, to our software. And now they're a very happy customer, but it's, obviously there wasn't a great handoff in between the old compliance group and the new compliance group, and obviously their policies and procedures on how CRS and FATCA gets prepared and delivered wasn't documented, right? They didn't know anything about this stuff. So all that stuff should be documented and there for not only just the auditors, but for your own internal use as well.
So before we finish, there's a couple more questions I want to get to just real briefly. I think I might be able to answer a couple of them, but I also wanted to let everyone know that Foodman does offer training on this subject. We have one free course on our platform, and you'll be getting an email on it, and it's an introduction to FATCA and CRS. Then we have a couple of other courses. One of them is FATCA and CRS for the front line for commercial staff. And then our FATCA and CRS certified professional course, which is obviously for people who want to be prepared to be a responsible officer. One question we have here is whether or not you need to renew all W-9 forms with the new W-9 form 2024. I think, Stanley, that they don't have to renew them unless there's been a change of circumstance. This old form is still valid, right?
Yeah, the old form is still valid. There used to be a requirement that you have to update them every 3 years. I don't know that that's still in there. You could check on that, Isabel, and we could come back on it. But basically, they're valid. I mean, specifically, the W-9s are probably less susceptible to a need for change than changes in the W-8 series of forms, because that's where things begin to change, because FATCA is directed at foreign transaction issues. The W-9 is for U.S. people with U.S. banks, and now they're being used in foreign banks to certify that people are U.S. for purposes of FATCA. And what's interesting to me is they may have multiple citizenships, in which case they could be useful for CRS also. But it's, I don't see a need from 2018 to 2019 to update all of the W-9s. I don't see it.
Perfect. One other question was whether an FFI needs to create individual credentials to access login.gov. And the answer is that's precisely the point, is that you can't just share password information to get in. Every individual has to have their own account on either login.gov or ID.me in order to access the FATCA portal. And the final question here is—
Which, by the way, goes back to one of David's concerns, which is I can just go and know that every single individual who is going in, you can't share your data necessarily with somebody else and get to the same places. Unless, of course, somebody's not telling the truth and they're misusing your data.
So another question is a corporate company that has U.S. substantial owners when they opened the relationship, but in March of 2024, they notified a change of owners, and now they don't have any U.S. owners. Do they need to be reported in 2025?
And yes, okay. Let's see this last, because there's the one on the bottom caught my attention.
Yeah.
Well, I think as a question of KYC, this information needs to be had because of while we're talking about active NFFEs versus passive NFFEs, where reporting is different, or the retention of information is different also. I suspect that for the purposes of the bank's KYC, they should probably have that information, even if it's not reportable anywhere else. And a lot of this isn't unless there's an audit by the IRS. For example, nobody sends W-7s. Banks don't have to send W-7s into the IRS. They retain them in their own files. So if you want to have complete information on your customers and meet the CDD requirements, then I would suggest that you get all the information that you can on these particular shareholders that are all of a sudden no longer being provided to you from this foreign corporation. The ITIN question I thought was really great because it goes right to the thing we were discussing earlier. And it's telling you that when you want to apply for, you have to use the I-7, the W-7 application. And the reason for that is because it's a document with a restricted use. The ITIN the ITIN card or the ITIN number has a restricted use that ties back to the W-7 application. And that's why it's done that way. So when you file a 1040 in the US with use of an ITIN, it's for very specific transactions only. And that's why they're saying that in those instructions.
But just to ask the question, Stanley, if a person is not a US resident but has met the substantial presence test, an ITIN would be a valid number to use on the W-9 in order to report that person, correct?
But they're not able to report as a non-resident alien. They have to report as a US person. And that's where the issue comes in. They should have already been requesting a change of status with the IRS because of this, or at least putting the IRS on notice they've changed their status due to the substantial presence test. So yes, the ITIN might be able to be used, but when that's done, and remember, it's only because of the substantial presence test, which is, once again, a restricted group of people. It's a smaller group of people. Now we have 20 million of them, perhaps, in the United States. But it doesn't matter. We have a country of 365 million. The ITIN becomes useful only in certain situations. That's the point of it.
Perfect. And the final question is, if a person signs a W-9 but does not have a U.S. address, you do not have to have a U.S. address to sign a W-9. The
No,
W-9
you do not.
Okay.
But my advice would be to at least get some indices indice of U.S. Of being a U.S. taxpayer, meaning a card for permanent residence or a passport copy, which would assist you with validating the W-9. Now, you're not required to validate it that way. It's a suggestion for your own protection under doing your own risk assessments.
Right, getting that identity documents are important.
You have to accept the FATCA says you must accept the withholding certificate unless you have a reason to believe it's not accurate, in which case you can ask for more information. Actually required to ask for it. So here's the other additional information if you have questions about the information you're given, which is to pick up the passport or something else that would give you that information.
Well, we have gone over time, but we are very grateful to the people who have stuck with us. I do want to give Eugenie and David and Stanley an opportunity for any final thoughts before we close out.
I'd like to thank everyone for your attention and this very nice discussion. If you'd like to hear more, or you have any ideas of any other topics, what you'd like to discuss us in the future, feel free to contact us.
David?
Thank you very much for this opportunity. Enjoyed it, learned a lot, and appreciate it.
Well, I want to thank everybody for coming in. This is not a simple area of endeavor. It's very complicated. I would not have the slightest idea of how David does what he does because I couldn't program anything of my life. Well, maybe if my life depended on it, I would try and then fail. But I would tell you that we've had great great feedback about David's product, and I highly recommend it. With respect to us, we work on the other side of things. We work on the side which helps prepare the information for the use of David's product. So we are, strategically, it works very well for both of us. And I'm very, very happy that we had the response we've had today. I think we have 3 more questions.
Well, no, there's a question. What is David's product? So David, make sure they know what your product is.
Yeah, go ahead, David.
Sure. Well, thank you for those kind words, Stanley. I certainly couldn't read through all the accounting and legal legislation. So, I'm very much in awe of what you guys do as well. So our product is CRS FATCA 1, and it helps you load. It's basically a 3-step process. You can load your data. We'll raise red, yellow, and green flags and identify any sort of deficiencies, major deficiencies, minor deficiencies, and then we'll help you prepare the data, put it all in the right format for you. And in some cases, we actually deliver it to the tax authorities. So, for example, in Mexico, there's the SAT, there's some technical things you need to do to be able to deliver that data. We help you with all that. So, CRS FATCA 1 is the main product. We have some tax authority products, but, if you're interested in those, contact us directly and we'll be more than happy to tell you about them.
We have a visa question at the bottom of this list.
Well, I think that they're summarizing some of the types of visas that don't count for the substantial presence test. So thank you for that.
That's correct, and that is correct, by the way. For example, foreign diplomats is the most often used one in this country, or associated with certain international organizations through the UN and other things. They do not require a U.S. tax ID number.
All right, so I think that's good. Thank you again, David, Eugenie, great having you here. Stanley, thank you again as always. And thank you to everyone who attended. So until next month.
Thank you, everyone.
Yep.